Hey.
Okay. Where is that? Okay.
Yeah.
So we are going to work on cash budgets. Cash budgets. There are different kinds of budgets. We have the cash budget itself. We have functional budgets. We have master budgets. We have, we can say miscellaneous. Budgets and other types of budgets. So there could be several budgets. We have the, okay, so those are within the cash budget. So these are forms of budgets. When we are today, we are done with the one. We've done with functional budgets, right?
Yeah.
So master budget is when we have the functional budgets and prepare financial statements. So in the master budget, we can have the functional budget, we can have the cash budget, then we can have the financial statements. That's the master budget. And there could be other types of budgets depending on the objective of the organization. So when it comes to the cash budget simply is saying that our concentration is on mostly cash transactions. So every and all non-cash expenses are dispensed with. In other words, are not treated within. So all non-cash expenses are eradicated or eliminated. All non-cash expenses are eliminated. So we will have to first find what the cash transactions are, and we will make adjustments accordingly. So that's the cash budget. So we are only going to take, and when we talk about cash budgets, we will say that all monies coming in, monies coming in are called inflows. They are positive. Monies going out are outflows because the business is spending money out. We subtract. So these are some basic things we just have to understand about the cash budget. So we are going to start work. We are going to solve the question 3 on the screen, and then we will proceed from there. Any question?
No, please.
All right. So read. This is question 3. Where do you first read from?
Please, you have to read this one, the question.
Yeah, question 3. Where do you first read from?
The following, where do I first
Madam?
read from? That's what I'm
Yes.
seeing it on the page. That's what I'm seeing on the page.
Yes.
You will first read from the required.
Okay, read it.
A. Prepare a monthly cash budget for the 4 months beginning 1st July 2023. B. State and explain 5 purposes of budgeting.
Mm-hmm.
Then the following information relates to Andes Limited for the 4 months period beginning 1st July 2023 expected sales budget is.
All right. So you start. The name of the entity is what? And
Andes.
then you go and write the requirement. Monthly
Cash budget for the 4 months.
monthly cash budgets for the 4 months beginning 1st July 2023. All right.
2023.
Okay. So what do we now continue reading?
Okay. So we have sales, we have purchases. July sales is 30,000 and purchases is 16,000. August is 35 and 30,000, 35,000, 30,000. September is 22,500 and 35,000. October is 45,000 and 22,500. Other relevant information. 1. Forecast sales and purchases for the month of June 2023 are 30,000 Ghana cedis, 30,000 Ghana cedis and 14,000 Ghana cedis respectively. Wages to be paid to workers 3,000 each month. Dividend from investment accounting to 5,000 Ghana cedis are expected to be received on 31st October. Income tax to be paid in October 2,000 Ghana cedis. Preference share dividend of 2,500 Ghana cedis is to be paid on 30th September. Balance of bank on 1st July is expected to be 3,000 Ghana cedis. Equipment of 1,000 Ghana cedis to be purchased in October. Administrative overheads of 2,000 Ghana cedis, 3,500 Ghana cedis, 1,500 Ghana cedis, and 2,500 Ghana cedis are expected to be incurred in July, August, September, and October, respectively. This expense includes a monthly depreciation charge of 700. All transactions are for cash All transactions are for cash except purchases and sales. Suppliers are expected to grant 1 month credit of 5%, 50% of the goods supplied, while 8% of sales are for cash, and the remaining receivable is the subsequent month. Thank you.
All right. So before you start this, what you must first do is this. On the question paper, you write wages. Wages. Are the wages, is it a purchase or payments?
Payment.
Payment. So you write P.
Okay.
Dividend, purchase, receipts or payments?
Receipt.
Income tax, payments or receipts?
Payment.
Preference share dividend, income or receipts?
Welfare shared. You said welfare shared.
Dividend. Read it. Read a V. Read a V, and tell me whether it's payment or receipts.
Payment.
P. Equipment. Read it and tell me.
Payment.
Equipment to be purchased. Purchase. The money go out.
Yes,
Bank balance
so
will be down.
payment.
Administrative. So these are the payments.
Okay.
And those which require workings, you write workings against them. So, for example, VII, the figure there, when you read the figure, it requires workings. You cannot specifically tell or straightway tell that it is payment or receipts. For you to derive the payment or receipts, you must go for workings.
Okay.
Then the suppliers also, it needs workings. The IX is just saying that apart from anything purchase and sales, all the others are for our transactions. Are you good? So that we start. We start. So now you go to your question paper, you write how many months? It says for the 4 months, right? Starting from July.
Yes.
So we do July. So we put here July, August, September, October. Or let it go for it a bit. So July, August, September, October. Then you bring your Ghana city sign. Yes, currency sign. Then you put workings here. Workings. And you put right here payments or receipts. Is it P minus? Is it P minus R? Okay. So we can go with receipts. Then we go with payments. So we go with inflow first. Are you good?
Please.
So let's go. Now, which ones did we easily record the receipts? Which of the transactions in the question did we easily record the receipts?
I.
I. Okay. So we will record. What is that? What is it for I?
Dividends from investment accounting to 55,000.
Dividend from investment accounting. Okay. Dividend from investment. So we write receipts. Dividend. There's no need for working. So which month was the dividend received?
October 31st.
October
31st.
31st. Okay. October 31st. So October 31st means the end of October, right?
Yes, please.
So 5,000. We write the 5,000 here. Okay. So we come down here. We write payments. Payments. Let me see. Okay. Let me see whether it's going to fit. Okay. I think payments will fit there. So payments. Okay. So what are the payments?
Payments are wages, 3,000 each month.
Payments are what? We have wages.
Yes, 3,000 each month.
3,000 each month.
Income tax.
So 3,000, where is it? So July will be 3,000. August 3,000.
Yes, please.
September 3,000. October 3,000. What else?
Then what's the name? Income tax in October, 2,000.
In October 2,000. What else?
Right. Preference share dividend 2,500 in September, on 30th September. Yeah.
The preference dividend. 2,500 on September.
And then equipment purchase 1,000 in October.
So equipment. 1,000 in October. All right. Is that all? Go through and inspect whether everything is okay. The payments.
Yes. All transactions are for cash. No. Yes. Payment. Balance at bank on no. Yeah, we are done.
Okay. So now, which other items should we record which we haven't recorded?
What is?
So now, receipts. The business sells and receives money. So sales is not recorded, right?
Yes, please.
And also purchases. It's not recorded. Are you okay?
Yes, please.
So for sales, we will have to go and construct workings on sales. Are you good?
Yes,
And
please.
for purchases also, we would go and construct some workings on sales. So from what you just learned, when you are commencing it, you read the requirement, read the entity, write the entity's name, write the required for the A. So A, that's requires for A, monthly cash budget for the months. Then you'd now go and read the question, write all the payments which are easy to obtain, easy to derive, or easy to record. So you write PPP against all the payment and the receipt, you write RRR. Then those information which require workings, you put W against them. So even if you are here and the time is due and the lecturer says stop work, you get marks for the formats and the entries you just made.
Okay.
I hope you get it.
Yes, please.
Okay, so let's move on to the next. The next is for sales, we would have to go and prepare workings on sales. So we can say working one for sales. So we are going to prepare workings for sales. So sales. So we go workings. Working one. We have here sales. Sales, our interest is to find the cash sales. So let's look at something. What months have we? We have July, right?
Yeah.
So we have July, we have August, we have July, we have August, we have September, we have October. Okay. So the question said that what was the July sales?
The July sales was 3,000 wages.
The July sales were what?
July sales is 30,000.
So we can say sales balance brought forward or opening balance or balance brought forward. So July sales was 30,000. August 35,000. September 32,500. October 45,000. Are you good?
Yeah.
All right. What is next? Now let's go and find. So the sales. You can also write. Now look at it. It says that forecast sales and purchases for the month of June. Whenever you are constructing the workings, you have to include the June.
Okay.
Have you read that part?
For June?
Have you read that part? So, okay, let me write it this way. Which footnotes are in connection with sales? I is concerning sales, and we are also having where is it? And X is also on sales. So look at the workings. I says what? Read I.
I says forecast sales and purchases for the month of June 2023 are 30,000 and 14,000 respectively.
So though it says it's giving us a forecast sales for June, the question says that we should prepare our cash budget starting from July. However, in the workings, when you are constructing the workings where you are going to make adjustments, you need to include June as part of the workings. But in the main work, the main task that you should present your cash budget within this month, June is not part of it.
Okay.
Are you good?
Yes, please.
Okay. So we say that forecast sales for June. So it means this sales is 30,000 here and purchases is 14,000. Agreed?
Yes, please.
So we'll say the sales is 30,000 here
So 30,000.
for June. Then July 30,000, August 35, September 33, 32,500, October 45,000. Then so we've taken
Is
note
it
of
50,000 you've written or 30?
what?
In June, at
Where
the June place, the red ink, is it 50 you've written or 30?
30. Open your eyes.
Eh,
You are sleeping in the day. A time like this, you are sleeping. Okay, so 30,000. Okay, 30,000. So we are done with, watch, we are done with the I, which is in connection with sales. Am I correct?
The
So what is next?
supplier.
No. I'm saying there are two adjustments. There are two additional information about sales, and they are found in I
Okay.
and. So we are
Okay.
done with
And
this one. We are done with this on sales. What next?
okay.
What next?
You said they are found in I and X.
Can you see I've written I and X above the sales? Have you seen that?
Yes. Yes.
So those are additional information on the sales, which we have to when we want to deal with the sales, we have to go and read about them because they are all telling us about sales. So we are finished with the I. The I was saying sales for June is 30,000. So I've written 30,000 for June. So what other item about sales are we here to address?
It's in the X.
So go and read the X.
Suppliers are expected to grant 1 month credit of 50% of the goods supplied, whilst 80% of sales are for each and the remaining receivables in the subsequent
80%
month.
of sales are for what? Cash.
Each.
Are for
It's not
cash.
cash, sorry.
And the remaining receivable in the settlement. So what it means is that the sales figure we are looking at, they are all not cash sales. And I've told you cash budget, we are only interested in cash. Anything not cash, we dispense with it. We take them out. Anything and cash, we dispense with it. Do you remember that?
Yes, please.
The question says that 80%. The question says 80% of the sales are for cash. What does it mean?
80%. So 80% of sales, you calculate 80% of sales to get the cash.
Okay, so we say that we will say cash collection.
Okay.
Cash collection, right? We will make it bracket 80%. So find 80% of 30,000.
Okay. Oh, 80%. 30,000. 24,000.
24,000. That's for the June, right?
Yes, please.
What about July?
80% of hey, July is 30. It's the same thing, 24.
August.
August is 35. 28.
What?
28,000.
September.
September is 32,500. 26,000.
Are you finding the 80%?
Yeah.
How are you doing it on a calculator?
80 over 100 times 32,500. 80 over 100
Okay.
times the amount.
October.
October is 45,000. 36,000.
October. Look at the figure.
Okay. October is 45,000. It's giving me 36,000. Wait.
Then September is strong.
Yeah, let me check September. September is 32,500. 26. It's supposed to be
26.
26. Yes, not 36.
Then October. October.
Mm,
What's the figure for October?
36,000.
If you make it wrong, the work will not balance. So.
Yes, please.
Okay. So pay attention. Now go back to the X and read the further information.
Okay. XC supplies are expected to grant 1 month credit of 50% of the goods supplied, whilst 80% of sales are for cash, and the remaining receivable in the subsequent month.
Mm-hmm.
Yeah.
So how do you understand it?
So 80% of the sales will be recorded in the cash, and then the remaining receivables will go to the other month.
So in June, how do you treat the June?
So is it 20% of the cash? No, when
In
you
June, how do
pay.
you treat the June?
So remaining receivable in the subsequent month. So the receivable here is in III, right?
No.
Not that
We are
one.
still on the X. In June, it says 80% is for cash.
Mm.
So you've carried the 80%.
Okay, June. Sorry. So June's own is 30. I watch that.
Okay, let me explain it. It says that the June figure is 30,000. That's the sale. That's the sales. But out of these sales, cash collection will be 80%. In other words, they will collect cash of the sales in June. Are you getting it?
Yes.
They'll collect cash 80% cash on the sales, on the June sales in June. Then the balance, which is the receivable, meaning the balance will be owing in June. But then that balance, they'll collect it in July.
Okay.
You understand? That means receivable. Receivable is talking about the customers owing the business. The money business are yet to collect from customers. So in June, they will not collect the entire 30,000. Rather, they will collect 24,000, which is the 80%. Then the balance is 20%. Are you getting it?
Yes, please.
The balance is 20%. The balance in June will be collected in July. Then the balance in July will be collected in August. The balance in August, September. The balance in September, October. The balance in October when? November. We good?
Okay. Yes, please.
So that these are what is called cash collection policy. Cash collection policy. All right. So if 80% gives us this figure, then we'll say that the 20% cash collection for the 20%. Are you good?
Yes, please.
Cash collection, 20%. So when would they collect the 20% of the 30,000?
July.
July. How much is that?
6,000.
6,000. July. In July to when would they collect it?
August.
August. How much?
Yeah. 6,000.
Cash collection in August. When will they collect it? The 20%.
September.
How much is that?
2,000.
September. When will they collect it?
October.
October. How much is that?
6,500.
Then we are going to have November and December, right?
Yeah.
So I'm going to underline these. Now, this is
So
how. Ensure you are not making any mistakes, so others are working on balance.
please hold on, I beg you. It's supposed to be okay. Okay, it's correct. I'm just checking for you see the September the 26,000. Is it supposed to be 26,000? Please
That's
hold on, I
correct.
beg you. It's
It's
correct.
80% of that. Yeah.
Because it's 32,500. There's not going to be 500 anyway.
No, you are just finding 80%.
Okay, I've seen it. Okay, I've seen it. Sorry.
Are you done?
Yeah. So then the October one too. It won't come.
October.
Are you asking me? Sorry.
I'm saying, are we done? Are your figures correct?
Yes, they are correct, sir.
Okay. So now, have you seen I've underlined the balance brought forward, the sales figures brought forward? Have you seen I've underlined them?
Yes, please.
Otherwise, they are not cash items. So when I'm
Okay.
done, I'll come and also underline these figures here. June, July, August, September, and October. So this is the total cash sales. Total cash. What's happening? Total cash sales. So what are the total cash sales? The June figure. June is all right. I can write the June, but I'll not record it in the final work.
Okay.
Because the final work didn't ask me to or instruct me to include June. It says from 1st July. So I'll add 24 to 6,000. What do I have in July?
24 to
30,000.
6,050.
Then August, sum it up for me in August.
43,000.
43,000. Then September.
Sorry. I guess it's 63,000. Sorry.
Calculate it well.
Yes, please. Plus 26. 58,500.
What?
63,000. 63.
28,000 plus 6,000. How does it give you 63? But be
What did you
careful.
say? 60,000. Sorry.
No. 28. Look at it. We are only adding the
Yeah,
red figure.
I was adding the black and the red. Sorry.
I told you it's been underlined. It's not part. It's not a cash figure.
Yes,
We
please.
are only adding the cash figures.
34,000. The next one will be 28,000.
Mm-hmm. But be quick.
Then, oh, sorry. 36,000 plus 6,500. It's 42,500.
42,500. So I'll go to the workings. I'll go to main requirements, the main solution, and record the figures. Are you
Okay.
writing?
Yeah.
And record the figures in there. The June figure, I've told you, there is no requirement for the inclusion of the June month of June in the main solution. So that is exempted. So I'll go to the solution here. Sales is working one. What was the figure for July?
For sales
Yes,
or
we just finished.
the
The total cash collection. Quick.
the one we just calculated
Yes.
is 30,000.
August,
August is 34,000.
September,
September is 28,000.
October.
Right. 42,500.
Are you really sure I gave me the right figures? Because I'm really shocked.
It's not the one we just calculated.
What is 2,500? Okay, that's
Why
fine.
are you shocked?
Okay, that's fine. So we are done with sales. So the other X is also cancelled.
Okay.
Now, when we come to purchases also, we have I, which is also on purchases, and also we have X, which is also on purchases. Have you seen it?
Yes, please.
Purchases is also in the I, just as the sales. And it's also in the X, just as the sales. So we go and construct workings for purchases. Working 2. So working 2. We'll come and we'll start with purchases. So working 2. Purchases. We also begin with the month. June, July, August, September, October. We good?
Yes, sir.
Then what do we first start with?
Purchases.
We start with purchases or balance brought forward.
All right. Okay.
So balance brought forward. So the purchases, June figure, what is it?
June is 14,000.
14,000. July,
July is 16,000.
August,
30,000.
September,
35,000.
October,
22,500.
all right, so that's it. Then, so we are on the screen, we are done with the I. You seen it?
Okay. Yeah.
We are done with the I. Now, what is next?
The a cash collection.
Madam, what is next? There are two footnotes on purchases. We are done with the I. What is next?
Sorry. Let me see.
Look on the purchases. Look on, you are not looking at on the screen.
On the
The
screen.
I, the I on
Oh,
purchases are the
Isaac.
I is, are you looking on the screen?
I is purchases for the month of
Listen
June.
to what I'm saying. There are two
Um,
footnotes in connection with
mm,
purchases.
okay.
So I is done. I'm done with
Mm,
I. Which other footnote is left? That's what I'm asking.
I.
X, X. Can't you see X up there? Look at purchases on top. On top. Have you seen it?
Mm,
This. Look at the arrow. Have you seen it?
wait, let me see. Yes.
That's what I'm talking about.
Okay. Okay,
Because you
sorry.
are working with time. So you should be able to make some notes which will help
Okay.
you, scan your works quickly and write down quickly. So there are
Okay.
two notes on purchases. There are
Mm,
other relevant information. There are two items there which are on purchases. The first
mm,
one is I and X. So if you are done with I,
mm.
which other additional information have you worked on?
Yes.
X. So go to X. Let's read X.
Suppliers are expected to grant 1 month credit of 50% of the goods supplied, while 80% of sales
Do
are
we need a
paid.
sales?
Sorry.
Do we need a sales?
We've done that already.
So just concentrate on the pages. What do we have on pages? So read it again.
Percent of the goods supplied.
So suppliers are expected to grant 1 month credit. How do you understand that?
Suppliers are expected to grant 1 month credit.
Mm-hmm.
1 month credit. I don't understand.
Okay, so simply means that the suppliers, whoever buys in a particular month, they will give
Mm,
you 50% credit, 50%
mm,
1 month credit. So when you buy in June, let's say in June, if you buy 20,000, right, the suppliers will not require you to pay all the 50,000 in June. You pay half. They say you pay 50% of it, and the remaining 50% in the month of June, you not pay. You pay the following month.
mm.
Are we good?
Let's see.
So we are interested in the cash collection. Here, purchases has to do with the fact that the business is rather buying, right? The business is rather buying from suppliers.
Mm,
So here,
mm,
it is not cash collection. We will say it's about payments. Which month, how much are we paying? Which
mm.
month, or in the months we have, how much do we actually pay cash? That's what we are interested in. Are we good?
Yeah.
All right. So we go with payments. How much are we actually paying? Cash payments. So let me make it cash payments. Cash payment. What's the percentage?
50%.
So 50%. So you calculate 50% for each month and you record it because that is the cash amount you are paying in that particular month.
Mm.
Okay. So let's go. 50% in June.
50% in June is 7. Wait, cash. We are using the 14,000, right?
50% in June.
In June is 7,000.
July. Madam, open your eyes.
8,000.
August.
15,000.
September.
17,500.
October.
11,250.
So it says they will pay 50%, and they give 50% credit. So it says suppliers are expected to grant 1 month credit of 50%. So if the suppliers are saying that we are going to give you 1 month credit, and that 1 month is 50% credit we are going to give you, it means that whatever you buy in this month, you will not pay this month, you pay the next month. So they've given you 1 month, don't pay 1 month. But how much won't you pay for a month? It is 50%.
Okay.
So if 50% is a credit to you, that means you pay 50% right there, down payment. You make a 50% deposit. Is that correct?
Yes, please.
That's the 50% we just calculated.
Yes, please.
So what else do we do? Yes. When next will the business earn money?
Total.
When next will the business earn money? When next will the business pay cash again?
Okay. It's in the question. Let me see. In October.
Okay. So it says that they are giving 1 month credit. 1 month credit is saying that, and that 1 month credit, you pay 50%. So this month, you are not going to pay. Even if you pay 50%. Next month, then the following month, you pay the remaining 50%. That's the policy of the business.
Okay.
So if
Okay.
somebody that's the supplier's policy to the business. So in June, they pay 14, they bought items worth 14,000. This 14,000 is a mixture of cash sales and credit sales. Credit sales are you pay some other time. Cash sales are you pay on the spot.
Okay.
So and a supplier told the business that you are going to make a cash payment. We are giving you 50%. We are giving you 1 month credit, right? Of 50%. So if you bought 14,000 goods, the company says don't pay for 1 month. That 1 month is 50% credit. So how much are you to pay in that very month?
17,000.
Look
Sorry,
on this.
7,000.
7,000. So 7,000 you pay on the spot.
Mm.
You pay right there. But the balance of the 14,000, all the 14,000, you not pay all in the month. You pay 50,000, you pay 7,000, 50% right on the spot. The remaining 50%, it says that don't pay that month, pay the next month. Are you good?
Yes,
So the remaining 50% on the 14,000 in June, when would the business pay that to the suppliers?
July.
July. Good. So we'll say cash payments. Cash payments. 50%. So when will they pay the balance of the 50%? They will pay the 14,000, 7,000 in June. They will pay it in July.
Yes.
So do the rest for me.
8,000 in August. 15,000 in September. And 17,500 in October.
So that's all. Isn't it?
Yes, please.
Then I'll underline, look on the screen.
Yes, please.
I will underline the 14,000. I'm underlining them because they are not part of the cash issues. I'm only interested in the cash issues.
Okay.
Do you get me? The 14,000 has a component of credit in it. We are not interested in the credit. We are only interested in the cash, so that we will report it in our cash budget. I hope you get it.
Yes, please.
Okay. So I'll bring the totals here. So this is the total payments. Total Total payments. Cash payments. Now, the June figure is not really relevant because it's going to be captured in the what's the name? In the main solution. So I can choose to omit it. So July, what's the figure for July?
15,000.
15,000. August,
23,000. Um, 32,500.
Mhm.
2,000 plus 7,500. 28,750.
28,000.
750.
That's it. That's it. So I'll go to the solution and record those figures in relation to the total payment, cash payments. I'll record it. If you don't underline the 14,000, the assumption will be that it is part of the cash payment. But that 14,000, it's a combination of credit and cash sales.
Okay.
So it's not inclusive.
Mm.
So let me go to my purchases and I'm recording only the cash. So July, what figure was recorded in July?
15,000.
15,000. Let me use different 15,000. August,
I guess it's 23,000.
September,
September is 32,500. Then
what?
28,750.
Don't give me the wrong figure, so otherwise
Yeah.
I'll be having wrong figures. Okay, so now let's look at something. Are we done with the other relevant information? Are we done with I?
Yes, we've done the sales and the purchases.
So we are done. I. Are we done with it? Have we
Budget
treated it?
each month. Yes, we wrote it.
I. Have we treated it?
No.
I. Check your work. We've done it.
5,000 dividends. Oh yes, we've written it. Sorry. Income tax, we've written it.
Okay.
Preference share dividend, we've written it. We didn't do the bank one.
We didn't
did
do
a
which one?
total balance
So
at
dividend
bank.
is done. Income tax,
We've
preference
done it.
dividend. We'll come to that
We've done
side.
it. Okay.
Equipment. Have we done it?
Yes.
VI, have we dealt with it?
No.
So we'll come there. IX, have we dealt with it?
All transactions, purchases. Yes.
X, are we done with it? Have we treated it?
Yeah. Yes.
So let's deal with those we haven't dealt with. So we go to VII.
Mhm.
Administrative overheads of 2,000, 3,000 and 1,500 and 2,500 are expected to be incurred in July, August, September, and October, respectively. This expense includes a monthly depreciation charges of what? 700. So from the scratch, I explained that when it comes to the cash budget, non-cash expenses are eliminated. Okay, so we go to working 3. Non-cash expenses. What are some of the examples of the non-cash expenses? Examples of
Bank
what?
bank transaction.
So examples of non-cash expenses we speak about depreciation. We can speak
Sorry.
about amortization. These
Ah,
ones, they are all deductions, but they are not cash related. They are not cash
okay.
expense. They are theoretical. In real life, you will not find anyone saying that this is like the way I can tell you this phone costs 500. Depreciation, you can't tell anyone depreciation costs. I mean, this is the depreciation and show to the person this is depreciation and it costs this amount of money. They can never get that done anyway. So they are called non-cash. They are not realistic, but they are assumptions which are taken into consideration when computing figures, as we are in accounting,
Okay.
right? All right. So we'll move on. So the figures contain depreciation. What do we think we should do? Are you here?
Yes, I'm here.
The figures contain depreciation. What do you think we should do?
So the administration overhead 2,500 so 3,500 is to incur in July, August, September, and October. This expense includes a monthly depreciation charge of 700. So the monthly depreciation charge. So every month there was a depreciation of 7,000. So
700. 700.
okay, 700. So 2,500 minus 700.
That's correct.
2,500. 2,000 minus 700. 2,500 minus 700. 1,500 minus 700. And 2,500 minus 700.
That's right. So that's what we are going to do now.
Okay.
That's what we are going to do now. All right. So we start. Overheads means indirect expenses. Overhead means indirect expenses. I good. Overhead means direct expense. So they are expenditure, right? And they need to be paid. They are expenditure and they need to be paid. So I'll start with, it says administrative overhead. So working three will become administrative overhead. Administrative overhead. We are done with the cash budgets. We are almost done. Administrative overhead. All right. So we will start with the months. This one commences in July. So there is no June for the administrative overhead. So it commences in July. July, August, September, October. What are the values? Balance brought
2,000.
forward. What are the values?
2,000. 2,000. 3,500.
So we have 2,000, 3,500, 1,500, and what? 2,500. Then we will less the what? Overheads.
700.
Right?
Yes, please.
Sorry, we will less the depreciation. We will less the depreciation charge per each month. So depreciation. We will less the depreciation charge. And it says 700. So we have 700, 700, 700, 700. We are lessing each month. So what do you have for year one? The month of July?
1,300.
1,300.
2,000. 2,800. Then 800.
Mm-hmm.
Then 1,800.
So these are the cash, right?
Yes, please.
Cash overhead. OH for overhead. Then we'll go to our solution and record these figures in there. So overheads are expenses. Are they going to fall under the receipts or under the payments?
Expenses. The payment.
Good. Payment. So you say admin overhead. Working 3. What are the figures?
3,500. Sorry, 1,300.
Ensure they are correct too.
Yes, please. 1,300, 2,800,
Mm-hmm.
800, and 1,800.
Have we treated everything?
Not to the bank.
Okay, so the bank will come in later. So now I'll place in dashes wherever there are no figures.
Okay.
So dividend. July, nothing. August, nothing. September, nothing. Income tax. July, nothing. August, nothing. September, nothing. Preference dividend. July, nothing. August, nothing. September, October, nothing. Equipment. It's only October. Then I'll sum up. So I'm going to have you ask what? The total is. So we'll say total receipts. Because the title is receipts, I'll say total receipts.
Okay.
The description is receipts, so total receipts. Then August will be 34,000.
Yes.
September, 28,000. October, 47,500. Is that correct?
Yes.
I'll underline them with a single underline or single underscore. Then I come to payments. Payment to, I'll find total payments. Total.
So it's 42. Oh, it's
You
okay.
didn't add a 5,000.
Okay.
Total. Do my assignments for me. Oh.
No, try.
I don't want to hear that word. Do it for me.
Yes.
If you try, you'll be lazy to do it.
Hmm?
If you try, you'll be lazy to do it. So do it.
Yes.
Now,
Please.
total payments. We'll add all the payments. So 3,000, July, 15,000, 1,300. What does it give us?
Please, 1,000 plus, okay, 2,800.
Strong. Add it all.
One
3,000, 15,000, 1,300. What does it give us?
15,000. Sorry, 15,000 is 16,300.
I'm saying add from 3,000, 15,000, and
Um,
1,200. Add. You're adding all the payments monthly. All the monthly payments that should be added.
so 3,000 plus 15,000 plus 1,300, right?
Yes.
Okay. 3,000 plus 15,000 plus 1,300. Please, 19,300. Then 3,000 plus 33,000. Sorry, plus 2,800. Nine. Hey, what is this? So please wait. 65,800. Hey, wait.
It's 2,800, not what's the name?
What kind of confusion is this? $38,800. So with the October one, we'll add the 2.5 and then right. Is that right?
38,800.
So the September one will be 3,025, right?
September.
Will be all the
3,000,
20 days.
3,500, 32,500, 800. Add everything.
Okay. 38,800.
Have you added everything well?
Yes.
I guess you got 38,800.
Mm,
In October 2, you got 38,800.
mm.
Hold on. Okay, 38,800. Then October.
October. October is all the 1, 2, 3, 4, 5, 6, 5, 2, 8, 7, 50. 36,550.
500 and what?
60, 50, 50, 36550.
Then I'll underline this also. Then I would say here, I'll say net inflow, or I can say surplus or shortage. Surplus or shortage. Surplus or shortage. Or I can say net inflow or outflow. That means it is the receipts minus the payments, R minus P. So I'll pick the receipts for each month, subtract the payments for each month, the balance. That's the net value. I'll write it over there. So when it is an inflow, it is positive. When it's an outflow, it's negative. So outflows will take brackets or jackets. I told you, anything outflow is negative. So now let's do it. What do we have? So take each month, take the total receipts, subtract the total payment.
I should take the month received.
Month by
30,000.
month, month by month.
And then subtract the what?
Total
Yeah.
receipt for each month. You subtract
So
the
July is
payment
0.
for each month. July. What is the total receipt for July?
30,000.
What is the total payment?
Okay. Okay, I've seen it. Sorry. I've seen what he's talking about. 19,300.
So subtract it from the 30,000.
10,700.
Do it for all the month.
34,000 minus 38,800. Oh, 4,800. Then 38,800 minus 28,000. 10,800. Then 37,500 minus 36,500. You know right?
Do it. Check the September again. Hey, check the August again. Is the receipt first? Listen to me. Is the receipt first minus the payment? So do it and tell me what you get and the values you are obtaining.
And the receipt first. Okay, then it's negative,
Which one is negative?
I guess. Because
So
I
you
got
put
a
it in the
negative. Okay. Then 20,000. minus 38,800. Negative 10,800.
Mm-hmm.
10,950.
That's it. Then, when you finish with this, you then bring in the bank, right?
Mm.
The bank figure. That's when you bring it. It's the last but one item. So I'll write here bank balance. Bank balance. What's the bank balance?
The bank balance is 3,000.
Which month?
Bank balance
Which month?
July.
So where would we record it? Under which month are we going to record
July.
it?
July.
July. Bank balance is 3,000. I'll record it 3,000 in July. So I'll add it.
Mm.
I'll add it. What do we have?
18,300.
Hey, is it 18,000?
You add it to what? The total.
Your okay. Hold on. It is 10,700, no 18,000.
Sorry. I'm seeing it as 16.
So add it to the bank
12.
balance. What do you have?
12,300.
Hey. 10,700 plus 3,000.
10,000 plus 3,000. 13,300.
Madam,
The
take
way
your
I'm
time.
putting the thing.
Net inflow is July is 10,700 plus 3,000.
13,300.
Is that it's wrong? It's 13,700.
It's 700 rather.
I
Oh
said I'm
God.
calling it. They're not listening to me.
Sorry.
I said 10,000.
700. It's because
700
I'm
plus
still watching
3,000.
300. 3,700 same.
Watch.
Okay,
So
sir.
I'll draw when I drew this single line, I can draw it for all of them.
Okay.
So the balance at the end of July will become the opening balance at the beginning of August.
Okay.
Don't forget that the net outflow for August is 4,800. 4,800. So it
Okay.
is negative 4,800 plus 13,700. That's how we treat that figure.
Okay. So negative 4,800 plus 13,700.
What do you have?
8,900.
So 8,900. Then that balance at the end of August will become the opening balance for September. So you just repeat 8,900 there. Yes, what do you have?
18,700. I'm coming. 10,800.
Look at the figure very well. Is it positive or negative?
Negative 10,800 plus 8,900. Negative 1,900.
So brackets, don't write negative, brackets 1,900. Now
So,
you,
I'm sorry.
October, you gave a wrong figure.
Which is?
It's not negative. You said it's negative. October.
No, I didn't say negative. Oh, I never mentioned negative. I remember. I've even written it here. It's not negative.
Okay.
I didn't
All right.
bracket
Don't come and kill me before my time.
it.
So what was the figure for October?
10,950.
Positive. So we'll go on with the closing balance for September will become the opening bank balance for October.
October.
So what do we have?
1,900. 9050.
9050 is the closing balance.
13.
Eh?
No.
Then you
Are we
double
going
underline
to?
each of them.
Okay.
You double underline. Then you say that balance brought down. Are you good?
Yeah.
That's all. Any
Wow.
question?
No.
Any questions? Practice it to the extent that you can solve it on your own. It's not difficult. So we started at first with the requirements. We started talking about some of the budgets. The B in the question says, state and explain 5 purposes of budgeting. Why do companies budget? For resource
Okay.
allocation, for efficiency, to achieve management objectives. Very good. To
Yes.
achieve management objectives, to be able to meet customer demand. Those are some of the reasons why budgeting should be budgeting should be undertaken by organizations. Then from there, we first drew the format of the cash budget, quickly filled in those which are easy to fill in, and then those which required workings, we had to go and open workings for them. We started with
Okay.
the sales. We did workings for the sales. We were looking
Yeah.
out for the total cash sales, actual cash sales.
Mm.
Sales are money coming in. So how much money is the business going for? That's cash collection. We take the
Okay.
figures. We went to post the total cash sales. We didn't include anything credit, only the month in which we receive cash. Then we went
Okay.
on with purchases. Purchases also, which month? Because the purchases balances
Mm.
were all combinations of cash and credit purchases, and the
Mm.
business buys. So what policy has the suppliers in terms of their purchase policy or credit policy? In terms of the suppliers, we stated it, we learned it, and we realized that the suppliers were giving the business or businesses 1 month credit of 50%. So it means they have to pay 50% in the same month on the spot, but then
Mm.
the subsequent 50 months will be paid the subsequent month. So we had to go and search for the cash components of the payments. Which month did we actually pay in cash? We had to go and search for it. Then we added all the total cash payments for all the months and reported the total cash payments in our cash budget as working 2 under payments. Then we also went to, there was a requirement under overheads, which are indirect expenses, that there
Mm.
was a depreciation charge of 700 cedis per month. We had to go and
Mm.
take it out. Because depreciation is a non-cash expense, we had to take it out from the overheads balances and arrive at the actual cash overheads. And we also reported it under payment. Why? Because overheads are expenses which the business have to pay or the business has to pay. So that's basically what we did. And then when we finish, we add all the total receipts, add all the
Mm.
total payments, and then we found the net inflow or outflow. Over there, we can also write surplus or deficits. We can write surplus instead of writing net inflow. We can say surplus. That is when the receipt is more than the payment. That will give us a positive figure. Or deficits when the total payments are more than the total receipts. So that one we were going to have negative value. So we had 10,700 net inflow or surplus. We had 44,800 deficits or outflow, which was negative. We had 10,800, which was an outflow or deficit. And we had 10,000, which was 950 for October, which was a net inflow or a surplus. Then we brought the bank balance as at the 1st July, 3,000. We added it to the 10,700. We got the balance brought down. Then the balance brought down for July becomes the opening balance, opening bank balance for August. Then we sent it there. We adjusted it with the 4,800 by subtracting the 4,800 from the 13,700, and we got 8,900 positive balance, which became the opening balance for September. Then we subtracted the 10,800 from it. We got a negative or deficit or overdraft of 1,900, which also became the opening balance for October. Then, so negative 1,900 plus 10,950, which gave us a final balance of 9,050. So we have ended our class.
Okay. Thank you so much. So I'll send you the money.
Send it so that I'll pay my people. They are
Have
in my
thank
deal.
you. I've done that already.
Hold on. Let me end the recording.